Welcome back, everyone. And for this lesson, we are going to be discussing breakaway gaps and how to anticipate them and use them in our trading. So, what are we going to be covering during this lesson? We're going to be discussing breakaway gap identification, the significance of breakaway gaps, smoke screens, higher time frame versus lower time frame breakaway gaps, and then we're going to combine a lot of the concepts we not only discussed in this video, but previous lessons as well. So what is a breakaway gap? A breakaway gap is just a failure to deliver to a fair value gap or leaving a portion of a fair value gap unfilled. In other words, we tap into an upper portion if we're bullish of a fair value gap, and then we reverse, leaving a portion of that fair value gap unfilled and not delivered to. So an example of breakaway gaps, this lower breakaway gap we have labeled here. See how we're just tapping the upper portion of the gap and then taking off. This is still classified as a breakaway gap because we don't fill the entirety of the fair value gap. Here on the upper breakaway gap, we fail to even tap into this fair value gap at all. So that is another way to identify a breakaway gap. And we can use breakaway gaps to understand how strong the market is, okay? How quickly, in terms of speed, can we expect our buy-side targets or sell-side targets, if we're bearish, to be delivered to? So breakaway gaps are another good tool to have in our arsenal. Now, what is the significance of a breakaway gap? Why is it important to have knowledge and understanding of when to anticipate a breakaway gap? We can expect what price to deliver to. On the other hand, we can expect what price is not going to deliver to. It also helps us identify strength when bullish and helps us identify weakness when we are bearish. So having an understanding of when a fair value gap is likely to become a breakaway gap is a very, very important tool in our trading. Now, how can we anticipate a breakaway gap? We need to understand smoke screens. In other words, these are our tools to help us understand the likelihood of a fair value gap becoming a breakaway gap, either not getting delivered to at all or just delivering to a portion of the fair value gap and not filling it in completely. So these smoke screens are high probability inversions, breaker blocks, balanced price ranges, and then higher time frame prioritization. And we will discuss this once we get there later on in this lesson. But these are the main four tools that we use to anticipate a breakaway gap. And first, let's look at some examples of higher time frame breakaway gaps. And before we get into the actual examples in the charts, I want you to also remember everything we discussed in previous lessons on dealing ranges and IPTA. So again, just like all the other concepts, we start to combine these things and we can get a really good idea of where price is going to deliver to, where we should expect price not to go, etc. So let's jump into these higher time frame breakaway gap examples. Our first example, we're going to be looking at the weekly chart here on the S&P. And we can see we have a low, a high, lower low. So these consecutive up close candles, the bodies, that's your bullish breaker. So if we drag that out in time, we see price delivers to it beautifully and then reverses higher. Now, on top of that breaker there, where is that breaker residing? Right around consequent encroachment of this fair value gap, this white rectangle I have here. That's your BISI. Again, we're on the weekly chart. So we have a breaker overlapping that key reference point, which is consequent encroachment of this fair value gap. So since we have the opening price, this should be the closing price, right? Since it's a bullish breaker, that's residing right around that fair value gap key reference point. This is when we'd want to see the lower portion of it remain open as a breakaway gap. So that breaker is acting as a smoke screen per se. That's the analogy we're going to be using. It's not allowing the algorithm to see or care about the bottom portion of this fair value gap. So it's reasonable for us to expect the lower portion of this fair value gap to remain unfilled. Now we have moved down to a 4-hour chart, but we're still on the S&P, and we're going to be looking at high probability inversion / BPR smoke screens. So we create this fair value gap here, and if we're targeting these highs here or these equal highs over here labeled buy side liquidity, we can see that price failed to return to this fair value gap at all before reaching that target. So we need to be able to understand why that was likely to occur so we don't miss moves like this. And now we can see it's because we have these high probability inversion fair value gaps. So both of these SIBIs here were utilized to send price lower into a higher time frame key reference point. Now, we're going to find out what this key reference point is on the next slide. But for now, remember, high probability inversions in BPRs, it's what was initially utilized by the algorithm to send us to that key reference point. Once it gets flipped, or in other words, once we get that closure back above, that's the high probability inversion because it was initially utilized by the algorithm to send us lower. So in previous lessons, more specifically on the change in the state of delivery and the macro lesson, we were using this logic on lower time frames. It's the same logic. We're just applying it to a higher time frame because price is fractal. So we see here, price delivers to a key reference point. Again, we'll discuss what that is in the following slides. And then we start to see a reversal. This V-shaped recovery, that's your balanced price range. So those are trapped shorts. But we're focused right here. We close just above this inversion here. We open on the next candle and wick down into it. After that occurs and we expand away from it, there should be no reason, right? This candle, this is a 4-hour chart. So 4 hours we're spending in here before this candle closes. We've already had sell side delivery in this inversion here. We've already had buy side delivery through that inversion. So we've had both stages and the body's closed above it. So once this fair value gap, the white box I have labeled breakaway gap, once that gets formed, we've already had both stages of delivery below that. So it's reasonable for us to expect price not to deliver down to that breakaway gap. On top of that, we close above what? The higher high probability inversion, which is right here. Now, it is a small gap, but we can still see the beauty of how it operates. Price initially came up to it here, sent us to our key reference point, and then we closed above it, and look at these guys. Wick down into it one more time, take off. So these high probability inversions are acting as a smoke screen to the algorithm, and the algorithm can't see or doesn't care about the fact that there's a fair value gap here because we've already had both stages of delivery and these inversions reside above this fair value gap. So now this is that breakaway gap that we discussed earlier on in this lesson. And we can see that we tapped into the upper portion really quick and reversed. So we failed to fill out the entirety of this fair value gap, which is why this gets classified as a breakaway gap. Now, it's easy for people to say that after the fact, but how can we expect that to be reasonable, right? Why didn't price go to 25% or 50% or 75% or the low of this 4-hour fair value gap here? In order to answer that question, we need to zoom out to the higher time frames. In this case, we're looking at the daily chart, and we're focused on this delivery right here. That is the delivery we just saw on the previous slide when we wicked into the upper portion of that 4-hour fair value gap. Now you can see this daily fair value gap was from a long time ago, right? But there was no bodies closed below. So we continue to have this on our chart in case we do return back into it. So we're putting priority over the higher time frame, or in other words, the daily chart. And now we see beautiful delivery. So I've copied and pasted that daily fair value gap from the previous slide. That is this gray box you see here labeled daily BISI. And we can see that price comes down and wicks exactly to the top of it. And when this occurs, when we have a higher time frame and a lower time frame fair value gap overlapping with one another, this is when we can expect the lower time frame gap to remain as a breakaway gap where it fails to fill out the entirety of the lower time frame fair value gap. So we come down, tap to the tick the high of that daily BISI, which prevents us from reaching the lower portion of that 4-hour fair value gap. Now let's discuss lower time frame breakaway gaps. And this is when we're going to really start to see some eye-opening things, combining not everything we've already discussed in this lesson, but the concepts we discussed in the change in the state of delivery and macro signature lesson. So we've dropped down into a 15-minute chart, and let's discuss what we see here. So down here, this is that daily fair value gap high that we just discussed, to the tick, I may add. So we can really see how we can use multiple time frames to get a great understanding of what is occurring in price. We have this 15-minute SIBI here. The algorithm initially utilized that SIBI to send us to that key reference point. Again, that's that daily BISI high. So this whole move down, of course, including what we just described with that SIBI, we were in a state of sell side delivery. After we delivered to the key reference point, this is the exact reaction you want to see if you're looking for a reversal to buy side. We tap it to the tick, and then we have that V-shaped formation. Sell side delivery, buy side delivery, trap shorts. The algorithm isn't going to want to come back down here to give trap shorts the opportunity to exit their position. They are underwater as we continue to climb higher and higher. Okay? Now, how do we see a high probability inversion and breaker smokescreen on this 15-minute chart? Well, we continue to climb higher and we create this fair value gap here. We consolidate and price returns to it. Does it fill out the entirety of this fair value gap? No, it just taps into it. So this is still classified as a breakaway gap. Now, this whole move, it's still reasonable to expect a move down to this breakaway gap to fill it out, right? We wouldn't really want to see that though, because like I said, we've already had sell side delivery and buy side delivery here. So this area right here should be balanced. But the real indicator that we're not going to return back to this breakaway gap here is when we close back above this SIBI. That is our change in the state of delivery. Now remember, to classify a high probability inversion, I know I sound like a broken record, but I really want to hammer it home. The algorithm initially utilized it when it was in sell side delivery to send us to a key reference point. Once the body closes above, that's our change in the state of delivery, and this becomes a high probability inversion. Now, what else is overlapping with this high probability inversion? This breaker, low, high, lower, low. This is your bullish breaker, okay? So we're not only closing above that SIBI here and getting a high probability inversion, these were bearish order blocks before, and we close above those as well. Just further indication that it's time for us to expect buy side delivery in hunt and longs. Now, look at this delivery right here, exactly to the low of that high probability inversion. And look at the bodies closing above consequent encroachment, or 50% of that high probability inversion. So we have the breaker in the high probability inversion acting as a smokescreen for price to come down to this breakaway gap. And this is a really good example on this 15-minute chart. So now we are zoomed in to the 1-minute chart, still on ES, and we're going to look at higher time frame prioritization smokescreens. So it's the same logic we used when we were looking at the higher time frame breakaway gaps. We see that 15-minute high probability inversion, but we're just looking at it on a 1-minute chart. And look at what we're doing. We're wicking into it exactly on the low of that high probability inversion. Now, look at this SIBI here I have annotated with the blue lines. It's the same logic for a high probability inversion or a high probability balanced price range. The algorithm used that, right, to send us to the bottom of this 15-minute high probability inversion. Once we close back above it, that's a balanced price range. Sell side delivery, buy side delivery. This is when we expect these types of gaps to remain open. On top of that, any inefficiency that is residing below this 15-minute high probability inversion, so that can be 5-minute, 4-minute, 3-minute, 2-minute, down to the 1-minute. Based on all of the things we've discussed here, we should expect any fair value gaps that aren't filled to remain as breakaway gaps until we meet some sort of buy side objective. And now here we are still on the 1 minute chart on the S&P, and we have a BPR smokescreen, and we're utilizing the macro. So here we're in the 1050 macro. We have a SIBI, and then we have buy side delivery through it, creating this BISI here, residing in that initial SIBI, right? So we've had both stages of delivery. When that occurs, especially during a macro, best case is when we can expect this BISI to remain as a breakaway gap, because this is a macro inversion. So macro inversions in and of themselves are higher probability. So if we have a BISI residing in the lower portion of that high probability inversion, we want to see that fail to get delivered to, or if it does, wick into it and not completely fill it out for higher confidence that we're onside and we should trust the long idea. So now we are back to the 4-hour chart, and we're going to combine some concepts that we've discussed in this lesson and previous lessons, and we can really see some beautiful price delivery. So if we have our dealing range low here and our dealing range high right here, that is the framework for the range that we are operating in until we meet these clear and obvious equal highs or buy side liquidity I have labeled right here. Now, previously discussed, we saw the algorithm do what? Sweep these relative equal highs. So this is your internal buy side liquidity. And it utilized this little SIBI, which we discussed in previous slides, as well as this one, and sent us lower. Where did it send us? To a key reference point, right? The high of that daily BISI that we were looking at. Because of that, we can reasonably expect this 4-hour BISI to not get filled completely. Now, on top of that, what is occurring? We're sweeping internal sell side liquidity here and internal sell side liquidity here. But more importantly, this is an SMT into a key reference point. This is something for you guys to go through your charts and study. Doesn't matter the time frame. This can be on the 1 minute chart as well. SMT into a key reference point. So yes, we're coming down to this key reference point and seeing the 4-hour fair value gap not get filled completely. That's what we want to see. But on top of that, for higher conviction, higher confidence that we can reverse here, we have this crack in correlation with NASDAQ. All right. Right here, we have a failed bearish immediate rebalance, right? We open, we wick up into this wick here. And if we do have an immediate rebalance, the rule of thumb is that we want to see expansion on the 2 candles that follow the immediate rebalance. Did that occur? No. So we know, based off everything we've discussed in this slide so far, this bearish immediate rebalance is likely to fail. And this is how we can start to see the initial clues, the initial footprints of the algorithm that we could be reversing. Now, what occurs next? Remember, this is the dealing range that we are operating in. So from this low to this high, this is equilibrium to the tick at 47.70. Exactly right there. Look at this price delivery on the 4-hour chart. Is there any inefficiency for the algorithm to deliver to below this swing low here? No. So this is when you expect this type of delivery. Beautiful to equilibrium of the dealing range, right? It has nothing else to refer to there. Yeah, you can see the fair value gap that I don't have labeled here, but it's going to the tick to this key reference point. Okay, then of course we expand higher, get the close, and we have our high probability inversions that we mentioned earlier on in this lesson, and we get our bullish immediate rebalance. So we wick into it here. This candle opens up, comes back down one more time, and then we expand and get that signature. So this is when the immediate rebalance signature is really, really powerful, when it's supporting our bias, when everything's already been discussed that occurred here, when the high probability inversion, right? If we're getting an immediate rebalance right above a high probability inversion, this is a high probability immediate rebalance. Okay? To wrap that up, where did all of this occur? Below Sunday open. So we have Sunday open, and we come all the way down here, and we do everything that we just discussed. So smart money, they're buying and entering their long positions below Sunday open, and we expand higher and get our equal highs, our buy side liquidity target. Okay, guys, so that is going to do it for our lesson on breakaway gaps. And I hope you guys really enjoyed these last 4 videos that we've posted on the channel. I recommend reviewing those videos, looking for the concepts that we discuss in those lessons within your own charts. That's how you grow. That's how you see these things live. Okay, you got to go look and prove to yourself that these concepts are actually occurring in the charts, in the markets that you trade in. If you'd like to join Real Traders Only, our private community, the link to that community will be in the description, and we would love to have you guys on there. There will be a lot more videos coming soon on this channel, so stay tuned. Later, guys.